Of course, as equity markets open here, we see fractional gains across the board for the Dow Jones Industrial Average and the S&P 500. Comes as we await those Fed meeting minutes this afternoon. Those are set to hit at 2 p.m. Eastern. Joining me now with more on the markets is Dale Smothers, CEO and President at RDS Wealth. Dale, it's great to have you on the show this morning. And as we see stocks, Javier, right near record highs, what is behind this latest strength?
And there isn't a lot that you can look at and be bearish on with the market unless you have a glass half full or a glass half empty mentality, rather. Kristen, you know, you've got inflation that stays pretty consistent, even with tariffs facing the global trade and the whole renegotiation of global trade. The inflation has not been an issue. Labor markets are resilient in spite of several reasons why they could become a little bit softer. We still see labor printing positively, and this really does create a little bit of a dilemma for the Fed. In my opinion, I still think that we see 2 rate cuts coming from the Fed, which will be a tailwind in this back half of the year. And when we look at valuations of companies that are really kind of on pause for the moment, like Apple, with the trade deal still looming for them, China's clarity will also provide some tailwind for big players in the market like Apple. And again, all in all, I think that this is an America First agenda. The optimism behind that is pent-up demand in the market, and we wouldn't be surprised at all to see a 6,500 or 6,600 point S&P 500 going into the end of the year.
Interesting, Dale. So, of course, another factor that could impact the direction of stocks, at least in the immediate term, is earnings season. We see NYSE listed Delta set to kick off earnings tomorrow morning with its report. It'll be followed by the big banks, of course. Anything that you're looking out for when it comes to this earnings season?
Earnings season is upon us, you're right, and that is the telltale sign. Clearly, it is what happened last quarter, and going forward into the next 2 quarters of 2025, we have a lot of things that as they clear, will, even if we have maybe poor earnings in a stock, let's say like Apple, we use that as an example here for the whole show, that particular stock may post a less than stellar earnings. It may even give us a little bit of guidance that is unclear at the time, and it all has to revolve around trade war. The trade war has been the determining factor for 2025 to this point, up until there was a small blip of time that we all remember where actual war, a world war perhaps, was on the table for just a few days. That subsided very quickly. Again, I think this America First agenda has a lot of optimism as we start to see onshoring, as we see pharmaceuticals come in. One of the stocks on our watch list as well is J&J. Again, weathered a lot of cycles in the market. I think a stock like J&J stands to be a benefactor of this. And one of the things that we're very optimistic about is the broadening out of this type of rally, if you will. If you look through from peak, or from trough to peak rather, over the last 3 months, from the lows of the market till now, over 25% rally, and that rivals a lot of historic rallies that have been phenomenal in the 80s and early 2000s, coming out of 2020 with COVID. These types of positive news cycles are going to create the momentum, in our opinion, that makes stocks broaden. It's not just the Mag 7 now, and there's even been some separation of the haves and the have-nots of the Mag 7. Amazon and Apple, I think, are 2 names that still stand to run up, even though the Mag 7 has been as high as it is.
Interesting, Dale. We are going to get these Fed meeting minutes on tap this afternoon. I know you referenced earlier you see 2 rate cuts in the forecast, or think that that would be the right course of action, perhaps going forward. How could the Fed impact the path for equities?
The Fed will certainly have a bullish impact on equities over the next 6 months. And to be real honest with you, I think it also has a bullish impact on bond funds, let's say. It's not going to help any bondholders that hold to maturity, but on short-term bond funds, I think you will see some capital appreciation, which has been something we haven't seen in a long time in a balanced portfolio. At RDS Wealth, we have a lot of clients who are looking for the stability, not so much all of the undulations or the volatility in the market, and a little bit of a rate cut could bring some well-needed reprieve, if you will, or relief to a bond side of the portfolio, some capital appreciation perhaps. With the idea that rate cuts are the next news that we are paying attention to, we are still very bullish on the market because we believe the Fed will have a bullish impact.
All right, Dale Smothers, CEO and President at RDS Wealth, joining us this morning. Dale, thank you.
Thank you.
All right, everyone, still to come, NYSE listed BWLP